Jason brings quite a few points in the email he was sending to Preston and I, and just from that email, you can really see how knowledgeable Jason really is. And so for everyone out there, I would really suggest that you check out Jason's site, westnewton.co. He has a blog in there, and it's really, really helpful, especially if you're a new investor. So as said before, Jason had quite a few great points in this email, but one of the things that he was disagreeing with us about was whether or not you could time the stock market. And if you listen to the last episode of the Investors Podcast, that was episode 23, you could hear that we were talking about the stock market currently probably being a bit overvalued. So what you will see me doing is not necessarily selling, but I would be really, really reluctant to buy a lot of the stocks in the moment because I think they are overvalued. But how does that correspond to Warren Buffett, who is saying that you can't time the stock market? At least in my opinion, I think that timing is almost impossible, and I would really like to elaborate on this. Because especially timing in the short run, that is harder than it looks. So you won't be hearing me, and especially not Warren Buffett, who is telling you to buy today and sell in a week, or even a month or a year. That's not how the stock market works. But what about timing in the long run? Is there really such a thing as timing the market? So I will not really answer on behalf of Warren Buffett. You can do your own research about that. He's having a lot of great quotes about how to time the market. But I would really like to respond to Jason and everyone out there who are considering whether or not you can time the market. And at least in my opinion, you can to some degree, but again, perhaps not as easy as it looks. So to look at whether or not it's easy or not, let's have a look at Dow Jones. And if you want to look at Dow Jones, simply Google Dow Jones and you will get this picture. Now let's look at the last year. Now when you look at the last year, it might seem like it was easy to time the market. So you would be selling here at say 17,300, and then you would be buying back at 16,000, and now that we are with 18,000, then you would be well off. Now that's really not how stock investing works. Stock investing is much more complicated than that, and especially in the short run, I would say that it's impossible to time the market. And I think that was also some of the things that Jason was talking about. But what is it that I'm saying now that I think that I can time the market? Because I think that that is probably how some people would interpret what I said in the last episode. Well, I don't think you can time the market in the short run. However, I do think that you can time the market to some extent in the long run. And when I'm talking about the long run, I'm really talking about situation that happens rarely. So this is the crash in 2007-8, and you can see that it was trading around 14,000. And then you would see here in March 2009 that we would see only 6,000. So that's 1/3 of what the Dow Jones is right now. Now, I'm not the one who will be telling you that, well, it was easy for me to forecast. I'm not the one to be telling you I bought at 6,000 and sold at 14,000 before that, and now I'm sitting at 18,000. That's really not what I'm saying. But what I'm saying is that it is possible to look at fundamentals, and for instance, PE might be one of them, and saying it really doesn't make any sense here in 2009 that stocks were trading so cheap, because companies were still making money even though it was in the middle of financial crisis. It just didn't make any sense that they were so cheap. Now that's not the same as saying I would buy exactly at 6,626. Not at all. But I still think it's possible to time the market in terms of looking at the overall level and determining whether or not you want to be in the market. Now, I'm not talking about being completely in the stock market or being completely out of the stock market. What I'm saying is that right now we're here at 18,000, I think that perhaps we are looking at a stock market that is slightly overvalued. Now, whether or not it's like 20% or 30%, that's really not up to me to say. But you can look at fundamentals and see, do I really want to enter the stock market right now? Do I really get a good deal for the money that I'm putting in? And what we do know is that in the long run, stocks will return to the fundamental value. So when I'm talking about timing the market, I'm talking about timing the market in terms of having a long time horizon. And if you do that, And if you buy at reasonable prices, then you'll be profitable in stock investing. Well, I just wanted to say one more thing here. Even though that you bought at really expensive prices, say in October 12, 2007, you would still have been making money today. So even though that you're buying at expensive prices, you would still be making money in the stock market, but you will cripple your return. So always be thinking about, do I really get my money's worth when I'm investing in stocks?